Is the hype surrounding around gold investments warranted? Today, we saw it reach near all-time highs on the backdrop of a looming recession, as we likely do around these times. But does that mean that you should be running to it as well? In this video, I'm going to explain to you why you might want to think twice before jumping in on the bandwagon. Gold has always been a popular investment choice. Its appeal comes from its perceived safety during economic uncertainty. It's used, notice I said perceived, its use as an inflation hedge, and its role as a diversification tool. But is it actually? We often see news headlines, celebrity endorsements, and investment products centered around gold, fueling the hype. Here's your first gold nugget of info you probably never knew. The US dollar hasn't been able to be converted into gold since President Richard Nixon ended the practice in 1971. Before this, people would buy gold bars as a way to diversify their investment portfolio and give them a safeguard against inflation. That was back then. And some people still do this, but instead of burying gold bars into their backyard, they're actually buying stocks or mutual funds that invest in gold, such as the GLD. And here's the kicker. The dollar isn't backed by gold anymore, so investing in this precious metal won't actually help you fight inflation. You might have heard Grandpa over Thanksgiving dinner saying that buying gold is the way to go, but it hasn't been backed by the dollar since 1976. Therefore, gold's value doesn't always rise during economic crisis, and inflation fears can sometimes be exaggerated, as we have seen. Gold also has limited correlation with stock market performance, meaning it might not be the perfect hedge it's often portrayed to be. And here's a few more reasons why gold is kind of a joke to own. Gold's price is heavily influenced by speculators, making it highly unpredictable, as we have seen. And gold has actually underperformed compared to the stock market historically, and if you account for inflation, it would have lost you money over the last decade. Gold also can't be valued like other investments because it actually doesn't generate cash flow. Not to mention, it also has high transaction costs and storage fees, price volatility, and gold doesn't produce income or dividend. And the big factor for me on this is the opportunity cost of investing in other assets with potentially higher returns, which there are many. Let's take Apple, for example. Here's the all-time performance of GLD, or the gold ETF, since inception. And you can see here, it has returned 316% since November 12th of 2004. Not bad, right? But when you consider the performance of Apple during that same period, it's up 13,500%. Tech isn't really your thing? That's okay. Let's look at something like Costco, for example. The return on that since November of 2004 is 924%. It's actually 3 times the amount of gold. Look, I'm not saying that you can't own gold or to avoid it altogether, but what I am saying is that flocking to gold as a safe haven against inflation has never really proven to be the move, at least not since 1976. So then what's the alternative? Here's a couple of options. Diversified investment portfolios, including stocks, bonds, and real estate, all have outperformed gold for decades. So creating a portfolio around that makes a lot more sense than just owning gold for the sake of owning gold. Low-cost index funds, or ETFs, and I would look to rebalance these as needed depending on the points of the business cycle that we're actually in, but this is also a viable option that would outperform gold no matter what market we're in. Or you want to take the lazier approach, which is perfectly fine, a proper balance of growth stocks, mutual funds, which historically has also outperformed investing in metals of any kind, could be an option for you. These alternatives offer diversification across different asset classes, potential for higher long-term returns, and exposure to assets that generate income or dividend. The bottom line here is that it's essential to be cautious about buying into the gold hype and really anything that has this much hype in a short period of time. A diversified investment portfolio with a mix of stocks, bonds, and real estate might be the better option, and it actually has been if you're just looking at gold. If you found this video helpful, please like and share and subscribe to the channel. Check out the links in the description for my Patreon if you want to support me in that way. And thanks for watching, guys. I'll see you in the next one.